Today on the Blockchain Report, Bitcoin is at 115K, which makes sense considering some Bitcoin treasury stocks are cratering like it's NFT summer. Trump's tariff tantrum wiped out $630 million in longs, and Strategy made more profit than Apple last quarter, and Wall Street said, nah. Plus, we've got Swan Bitcoin's Ben Workman and the crypto godfather himself, Michael Turpin, joining us for interviews you'd be a fool to miss. All that and more right now on today's show. Let's go! Good morning and happy Friday, my coin cowboys and girls and sovereign stackers. I'm Hank Hudson, broadcasting from the beautiful dystopia that is San Francisco, California. It is Friday, which means the markets are jumpy, the memes are spicy, and the SEC is probably drafting another strongly worded blog post. Before we dive into the inflation deja vu and the latest episode of What Did Sailor Mortgage Today, go ahead and hit that like button like you're trying to send it on chain, and follow RoxomTV and me and Hank at RoxomTV. Now, let's take a look at what the chaos the markets cooked up overnight in this morning's market rundown. We got a lot to do. Let's go. All right, so let's see how the markets are looking this morning. Not the best. We've seen a bit of a drawback in the last 24 hours as a result of Trump's tariffs talks. And it's not doing us any favors right now. Bitcoin hovering just above 115K. Ethereum down to about 3,600. It was up around 37.5 yesterday. We saw a bit of a drawback there. XRP coming back a little, around 303 a pop. Cardano at 73 cents. And Dogecoin doing what it does best, a whole lot of nothing, at about 20 cents. In TradFi, real quick, let's see the Dow Jones, ouch, down about 1.5 percentage points just about this morning. NASDAQ following suit. They're down 2% this morning. S&P 5 also down 1.5. It's a bloodbath across the board. Yikes. MicroStrategy down nearly 5.5% today. Coinbase down 14. Not good for anybody. Well, we got Luca Pagano, our crypto wunderkind and resident chart shark, on the line waiting for us to see what's going on. Let's do it. Yeah? Let's do it.
Oh, it's beautiful, Hank. This is not financial advice.
Luca, my man, thanks for joining us this morning. I need someone to talk me off the ledge because I'm seeing a lot of red today. What is going on in the markets? What are you seeing in those charts, my friend?
Hank, how's it going, man? A pleasure to be here. And yeah, I mean, we're seeing a little bit of red, but to be honest with you, you know, it's nothing that we haven't foreseen in terms of the pullback. We were seeing on Wednesday when we were talking about the digesting of this leg up, you know. So for now, I see some natural movement. We can head up on the chart and see it ourselves, you know, together and see what the market can give us, you know.
Yeah, let's take a quick peek. It's Friday. I know we're always trying to close before the weekends on a high note. What are you seeing today, and what are you hoping we're going to see going into this weekend?
Yeah, I mean, the ideal scenario for me, I think we're testing here. If we see real quick, let's zoom in a little bit, you know. Yeah, I think there we can see it pretty neat. We've seen this leg up, you know, that brought us to all-time highs. Now we're seeing, for me, and we've foreseen another leg down into the bottom of the channel, right? Let me just delete this wiggling, you know. For me, what you want to see here is maybe we take another punt, but nothing to be worried about. We should commence, you know, the recovery soon for us to finish with a nicer green heading into the weekend. You know, for me, the ideal scenario here, Hank, is we're just punting here the low of the channel, you know, of the pullback. We should be headed back pretty soon, I'd say, before you know, in about 2 to 3 hours we should be heading back up. At least that's what you'd like to see if you're bullish. And for me, a lower risk zone into bullishness is on the mid channel. We see here, I guess it's about above $116,000. I think we're seeing a better scenario of recovery in there, you know.
Okay, good. I don't know if I can take another night crying into my pillow, so I'm glad you see some happier tidings on the horizon. Right now, do you feel like this pullback, I mean, I guess it really wasn't that bad. It was like 3K over the last 24. I remember last time we had a Trump tariff scare, the whole market went into full-blown panic mode. So I guess like by comparison, maybe this isn't as bad, right?
Yeah, I mean, for me, this is, you know, this is natural market just taking a bit of a rest on the amazing leg up we had. You know, for me, honestly, for us to, you know, think more positive here, Hank, is, you know, what you don't want to see is too much time happening in the lows. For me, at least I don't like that too much. You know, so I mean, I don't care about going into the 113s even. Not below that, honestly, but 113s maybe. But just as a quick, you know, flash out onto the late longers and just continue our leg up. You know, that's what at least that's what I'd like to see on BTC.
Oh, okay, well, you provided some solace to my racing mind this morning, Luca. I was getting a little nervous. I think we've been a little spoiled with Bitcoin's resiliency as of late, and even people that are seasoned like myself that have been in the industry for a while. It was an unfamiliar sight to see such a drop, but if you look at, you know, Bitcoin as a whole, it was nothing. It's a blip on the radar, right? So we gotta get going, Luke, and I know you got a busy day, and so do I. Before we let you go, people want more of your chart insights. Where can I send them?
Yeah, I mean, we'll be posting at Look at Roxom, and the best of the best, Hank. I'll be stuck in here watching the stream, so thanks.
You're the best of the best, Luca. As always, thanks for joining us, and we'll see you next week, buddy.
Yeah, bye-bye. See you.
All right, guys, we're taking a quick break. When we're back, our first special guest of the day, CIO of Swan Bitcoin, Ben Workman, joining us. You won't want to miss it. Stay tuned. We'll be right back with more Blockchain Report.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for this morning's bull run, and we will be joined today by a man whose brain might actually be on a Bitcoin standard. He's the Chief Investment Officer at Swan, the #1 Bitcoin wealth platform in America, and one of the sharpest minds in the game when it comes to leverage Bitcoin equities and treasury strategy. From retail investors to corporate boards, Ben Workman has been helping people understand why Bitcoin isn't just money, it's a mission, and we're super fired up to have him here. So let's give a big Blockchain Report welcome to the man himself, Ben Workman. Welcome to the show. Our audience is thrilled to have you here, and so are we. Hey, Ben, how are you this morning? Thanks for joining us.
I'm doing really well. Thanks for having me, Hank.
Oh, the pleasure is all mine. Really quick, Ben, before we get into it, for our audience out there that's not familiar with you yet, could you give us just a brief, breakdown of your background and the quick version of your journey into Bitcoin?
Yeah, absolutely. And it's been a pretty long journey. I actually was fortunate enough to find Bitcoin quite early. It was back in 2013. And that was the first time that, I like to say that I screwed it up the way that most people need to, where you start trading it and you think you're a brilliant trader, and it takes you a little bit of time before you figure out this is an asset that you should really be accumulating. This isn't something you should be trading in and out of your portfolio. So luckily, after a couple of years, I corrected course on that. And I've got a background that's in commercial distressed credit. I did consulting for a long time. I was at Fannie Mae for a little under a decade during that time period, and I've built trading programs that did algorithmic trading for digital assets before really fully turning my focus to the Bitcoin treasury space and to the leveraged Bitcoin equity. So I started publicly covering MicroStrategy, Metaplanet, several other companies, was a part of the group called MSTR True North that breaks down all of the moves in the capital markets around these companies every single week on Wednesday. And then recently joined Swan Bitcoin as their chief investment officer. So it's been a really exciting ride, and I can't think of anything else I'd rather be doing.
It's amazing. And, the Bitcoin treasury strategy is truly the talk of the town right now. So we are super excited to have someone like you who's got such an intimate knowledge of that space. And our first story is going to talk about it. And I believe you might, in fact, be in it. So I'm going to read it really quick. We're going to bring you back and then chat. Sound good?
Sounds good.
Rock and roll. All right, so first up, Sequence Communications and a host of other Bitcoin treasury companies had an absolute bloodbath this July. Sequence alone dropped 75% after peaking mid-month, and they weren't alone. Blockchain Group and Coincilium also all went down 40 to 75% in only a matter of weeks. This is despite most of them doing exactly what investors claim to want, putting Bitcoin on their balance sheets. Sequence, for instance, partnered with Swan Bitcoin and raised $384 million for its Bitcoin treasury strategy. That's more than MicroStrategy did in its first round back in 2020. And they were buying Bitcoin at around $119K a pop, so not exactly cheap. Then the music stopped. Sequence stock spiked from $1.43 to $5.39, only to crash back to $1.30 in days. Same story for the others. But why is that? Well, a mix of high entry points, profit taking, and one big old Galaxy BTC dump that seemed to spook the market. Now, investors are suddenly acting like Bitcoin treasury stocks are the new NFTs. Let's bring Ben back. Ben, Sequence raised nearly $400 million for their Bitcoin treasury strategy. That's more than MicroStrategy did in 2020, yet their stock just cratered. What do you think went wrong there?
Yeah, you saw a lot going on in the Bitcoin treasuries market, particularly as you see more and more of these companies entering the market. Investors start to have choices, and you start to see capital rotate throughout these different opportunities. And what you started to see was you saw capital coming out of the slower plays at the moment, like the micro-strategies that have achieved such scale that the stock isn't quite as volatile, and you saw rotation of capital into the smaller plays in the space, where people are really looking for that hyper growth phase in the Bitcoin per share metric. And as that happens and capital rotates into small cap and small float stocks, it can have a really drastic impact on the prices. And I think that's what you saw broadly across the industry was a lot of money moving into these stocks with really small float, causing those spikes, and then you saw some profit taking. Saquon's is a little different. They just got through the capital raise. And as a part of these capital raises, there's something called PIPE investments, which is private investments in public equities. And it's effectively the selling of equity to institutional investors as a part of raising that capital. And in that process, there's a period of time before those shares get registered with the SEC and they actually become available for those investors to trade. And I think that's part of what you've been seeing along with Saquon's right now, is those investors now have access to their shares. And from here, it's up to them during this early period, whether they stay along for the long journey or whether they decide that they're going to take their capital and rotate into their next investment. Every individual and every investor gets their choice for how long they hold on to these stocks. But I think this is going to be a temporary impact, and I think you're going to see the treasury space move forward in a really big way the rest of the year.
Yeah, I think that certainly seems to be where things are headed right now. And you yourself have been one of the loudest voices advocating for leveraged Bitcoin equities. This July, we saw a bit of a correction. Does that in any way, it's seemingly not, but I'd love to hear from the horse's mouth itself. Does that shake your conviction at all? Or do you think this is just typical growing pains of a new asset class?
Yeah, this doesn't shake my conviction one bit. This is a very long journey. When you're taking the other side of the trade of the devaluation of the US dollar, I feel very comfortable with any of those positions because I don't think that the spending and I don't think that the printing is going to stop. And with Bitcoin being the most pristine store of value asset that we have available to us today, the companies that are capitalizing themselves on top of this asset are putting themselves in a position for very long-term success. And it's turning the focus of these companies to generating shareholder value in Bitcoin terms. And that's a really new idea for a lot of investors, and it's one that they're having to wrap their head around, but they're starting to see the power of that. And MicroStrategy now having the change in their earnings to fair market value on their Bitcoin just really kind of shocked the world with a massive earnings quarter with $10 billion in net income and $24 billion in guidance for the rest of the year. That's going to raise a lot of eyebrows, and people are going to start wondering what's going on here. And what they're going to find on the other side of that question is radical transparency for your investors and an iron will to accumulate Bitcoin and raise the Bitcoin per share for them.
Interesting. And Sequin's partnered with you and your team at Swan for their strategy, buying at the time Bitcoin near what was all-time highs. In hindsight, would you advise companies to pace their allocations differently, or is there just never a bad time to buy Bitcoin if you're playing the long game?
There's never a bad time to buy Bitcoin, and you're never going to be able to know exactly what the market's going to do at any time. We're getting more used to the shakeups that come with the Trump tariff talk. You know, that's one that's been hitting the market over and over again. But fluctuations in Bitcoin when you have a long-term thesis is just noise. You know, in the community, we all seem to know or think we know where Bitcoin's going to go over the long term, and we have massive conviction that this is going to be $1 million plus asset here in the not so distant future. So I think that regardless of when you're buying Bitcoin right now, if you just look further down the path and you see what's going on with the macro economy, you see the impacts of AI coming into the economy, you see the spending bills, you know that the debt's increasing and they're going to have to deal with that, you start to feel very confident in your long-term outlook here. And I think for Saquon's and for all of the other companies that are adopting this strategy, they see that trend continuing as well. And for Swan, partnering with a company like Saquon's is a huge moment in this industry because it's really the first deal of its kind where they're bringing in a partner with a company that's Bitcoin native. Bitcoin is core to what Swan's been doing since the very beginning. And we've been helping our customers accumulate Bitcoin and custody Bitcoin. So we understand, you know, how to accumulate Bitcoin at scale and how to make sure that you're putting in robust risk frameworks to make sure you're protecting that Bitcoin on behalf of your customers. And that's something that corporations have a learning curve around as well. And so luckily we're here to help them really accelerate that journey and put in the right framework so they can pursue this strategy for a very long time.
Yeah, is it Michael Saylor at Strategy always says, like, for every Bitcoin you don't buy, like, that's $13 million you probably won't have in the future. So at this point, it's like a couple $1,000s here and there. Even tens of thousands is going to be kind of negligible if you're playing the long game. Some analysts right now are actually comparing Bitcoin treasury stocks to NFTs in the sense that they're hyped, they're volatile, and often misunderstood. What's your response to that, and what do investors need to better understand about this space?
Yeah, I mean, this is pristine digital capital, so this is very different than, you know, trading art on the blockchain. But I think they're looking at that more from the trend perspective, right? This is really the first cycle where investors have access to this kind of Bitcoin exposure through their traditional brokerage accounts. And that opens up a different level of capital and a different type of investor that can use their brokerage account as their new top of funnel to discover Bitcoin by trading in the equities. So I think it's garnering a huge amount of attention out there. People are seeing the performance over the last several years of companies like MicroStrategy. They're seeing all the excitement around companies like MetaPlanet, and they're wanting to participate in that environment. And as you do that, you start to get exposed to the asset that's making it all possible. And you start to learn lessons about viewing volatility not as risk, but as energy, right? It's what makes these stocks alive. And these equities that are adopting this are not afraid of volatility. It's what makes this all work. And so because of that, it's a different type of investing, but it leads them down the rabbit hole of discovering Bitcoin. And it typically takes a very prominent place in their portfolio. And I think that this is a really big moment for Bitcoin, bringing all those eyeballs and helping them learn Bitcoin and put it in their portfolios. This is going to be a major shift.
Yeah, it seems like that for sure. I mean, we're living it. And I could understand why maybe some people could draw the very unfair comparison with NFTs. It's kind of part of a similar space to those people that don't really know about the space that much. They see volatility, they see all the excitement around it, and they're like, oh, these two things are similar. They must be similar, but they're not. I mean, to people in the space, we know they are very different things. No JPEG monkey cartoons here, thank God. I got burned on those. All right, Ben, we're going to take a quick break, but when we're back, we're going to go into our deep dive with Ben and see all the things he's working at Swan and talk more Bitcoin treasury strategies in just a bit. Stay tuned. We'll be back with more Blockchain Report. All right, we're back with our deep dive with Ben Workman, the CIO at Swan Bitcoin. Ben, I want to talk a little bit about your new role or newer role at Swan as the CIO. What's the big mission you're aiming to drive forward from your new seat at the table?
We're focused solely on Bitcoin adoption, and whether that comes through our retail customers or whether that comes through our more than 2,000 business customers, this is something we think is very important to a lot of people's future. And me coming on really helps us expand that focus into the corporate treasury space. And so most of my time is going to be spent helping these corporations adopt it, helping them implement the playbook and put the right risk controls in place to make sure that as they're building their treasury and they're changing their focus for where they're creating shareholder value, that they're doing so responsibly and in a very controlled manner, but also helping communicate that message out into the market. This is a rather new trend, even though MicroStrategy's been at this, for more than 5 years. A lot of people are still hearing about this for the first time, and they will initially think that it's a very risky thing that's happening in the market because they hear that word leverage, and the word leverage scares people. But really, these companies are very underlevered. A lot of the actual capital raising is being done through equity. You don't see any large overlevered companies out there in the market right now. So it's being done in a very controlled manner at the moment. So, our mission at Swan is to be able to help accelerate that journey for both our retail customers and for our corporate customers, and help people to understand what is happening and what is the value that Bitcoin brings to their portfolio, whether it's on their personal balance sheet or their corporate balance sheet.
Yeah, and you actually helped, you mentioned leverage, you helped create Swan's leveraged Bitcoin equity guide, right? Like, what are the LBEs in plain English, and why should investors care?
Yeah, I did. So there was a lot of questions that were out there when companies are deploying these because it's a very different way to think. It takes the focus off of the income statement until recently when people are now getting their eyes opened by MicroStrategy's income statement. But it put a focus on deploying the assets on your balance sheet. And you're doing that through pulling many different levers. The first one is always the common stock equity. And this is what people refer to as the ATMs typically, but it can be done through many different channels where you're selling equity to investors. They're providing you capital. You're taking that capital and putting it on the balance sheet. And the investors now benefit from the long-term appreciation of that Bitcoin, but they're also capturing the arbitrage between the market value of that equity and the net asset value of the assets on the balance sheet to create value and increase Bitcoin per share. But you also saw a lot of activity in the convertible bond market early. That was one of the largest tools that helped MicroStrategy really scale as they were going through this process. And it helped open investors' eyes to the different pools of capital that have different needs. And the one they found with convertible bonds was convertible arbitrage desks. And these are people that are effectively trading the volatility between the equity and the convertible bond paper. And what happened is having a huge amount of Bitcoin on the balance sheet and creating a volatile common stock allowed them to trade in and out of their positions more frequently than they typically would be able to if they were investing with a lower volatility equity. And so that Bitcoin is really making it possible for them to pull returns in faster than they would have before. And now you're seeing the next emergence, which I think is really going to be the biggest one, which is this transition into Bitcoin-backed credit instruments. And those are being deployed via these preferred stocks that you've seen Strategy offering several of already, where they're really now targeting that, $300 trillion in fixed income out there. And what they're doing is they're bringing the benefit of high yielding products into the market, high dividend paying products that are very attractive to investors. And it's made possible by the compound annual growth rate of Bitcoin. So if Bitcoin's appreciating at 30% a year and they owe the preferred holders, 9%, the rest of that gain is going to the common stockholders. So they're really finding creative ways to drive value to their common stockholders by deploying their balance sheet in a very strategic manner. And this is something that has a steep learning curve to it, and people are finding that, but this is one of the most engaged retail investing communities I've ever seen. People are digging into this every single day. You're seeing breakdowns out there on YouTube and on X every single day. And the transparency around these companies is really reigniting investors in this space.
Yeah, and I was really excited when I knew you were coming on the show because you mentioned Strategy. They've kind of been the belle of the ball as of late, specifically with this corporate Bitcoin treasury plays that we've been seeing. I know you've studied Bitcoin treasury stocks like Strategy and Metaplanet very extensively. What do you think makes them so unique, but maybe also potentially misunderstood as we enter this new era of Bitcoin treasuries?
Yeah, Strategy and Michael Saylor are clearly the pioneers in this space. Someone has to take the risk and really define the rules of the road for everybody else to be able to follow. And that was what Saylor really did. He had to go into each of these individual markets and show that there was demand from these investors that would invest in this type of a value proposition. And he's been doing that through the equity markets, through the debt markets, now through the preferred markets. And that's making it possible for all the companies that are following in their footsteps to really be strategic about how they deploy this playbook. You know, Metaplanet in Japan, they found a really unique opportunity, and Simon and Dylan have been capitalizing on it in a big way, where they've got a tax arbitrage over there, where it's actually better for investors in Japan to get exposure to Bitcoin through what's called their NISA accounts, because there's a tax benefit. If they're holding Bitcoin itself and trading in and out of Bitcoin, that can hit them with more than a 50% tax rate. But if they're holding a company like Metaplanet in their NISA accounts, it's down to like 20. And now you just saw them announce that they're launching perpetual preferreds in Japan. And that's a huge moment for a company like Metaplanet, because Japan has a really unique rate environment. Their rates are incredibly low. So they're yield starved. And so being able to bring a product to market that's going to offer, I believe the cap on what they're offering is about 6%. That's huge compared to, you know, their overnight rate, which I believe is around 0.5%. So you're seeing innovation globally now in this space. It's not just contained in the US. You're seeing these Bitcoin treasury companies pop up at every market, and each of these markets has something unique to offer. But it's all made possible by Saylor really blazing the trail, taking the risk. He had to endure a bear market and show that you can come out the other side with this strategy as long as you're controlling the leverage you're putting it on your balance sheet, and you're being transparent with your investors so that they know exactly what steps you're making and why you're taking them.
Yeah, and you mentioned we're seeing these Bitcoin treasuries starting to pop up everywhere. It feels like every day we're seeing one or two new ones come into the news. How would you go about walking one of those companies through, or advising a company considering a Bitcoin strategy today? What would you tell them?
Yeah, I think there's really two very distinct paths. And quite frankly, we actually jumped over the one I thought was going to happen first. You know, I thought initially what we would see in the Bitcoin space was companies allocating very small portions of their balance sheet to Bitcoin, more as a hedge, right? In that 1 to 5% of maybe it was just their cash and US Treasury reserves. You know, we jumped past that because Saylor showed that there was an opportunity here in the financial engineering of products that are uniquely tailored to attract investors and onboard capital that otherwise wouldn't be able to get exposure to Bitcoin. You know, a lot of these institutional investors by charter can't invest in Bitcoin itself. What they can invest in is equity and credit instruments. And so he opened a lot of people's eyes to the opportunity there because of how deep those pools of capital are. And so you started seeing more and more companies taking the leveraged Bitcoin equity approach to this and issuing those securities into the market to raise money to bring it into Bitcoin. But I still think that the other model is going to come back, and that's going to be one of the big catalysts. I think that the more of these spending bills we see coming out, and the more that inflation and the debt problems start getting highlighted, companies are going to start seeing that you need an alternative to opt out of that system. And right now, the only true decentralized store of value that they have immediate access to do that, that they can capitalize themselves on, is Bitcoin. So I think that as you continue to see the weakness in the markets and the uncertainty in the markets, more and more companies are going to look at putting that hedge on for themselves and converting portions of their balance sheet to Bitcoin. And that's going to be a movement that's really going to need to be applauded by this community. You know, we're used to the high octane type of investments, but Bitcoin is a store of value. And that's something that's applicable to individuals, and it's applicable to businesses, and anybody that's taking the steps to protect themselves is making the right decision.
Yeah, and Ben, from your seat, I'm sure there's a lot of people in our audience right now who are are listening to what you have to say, and they're like, I like the cut of this guy's jib, but I'm not sure how or if I'm ready to invest in Bitcoin yet. What would you advise them is the smartest way to invest in Bitcoin today? Is it ETFs? Is it self-custodying it? Or is it Bitcoin stocks? Or maybe something else?
You know, I think there's a lot of ways that people are going to start getting exposure. I think the ETFs became very simple because it feels very familiar. And when you start to see an investment, even if you allocate a small portion of money to it, it captures your attention and it makes you want to learn more about it. Now, I'm always an advocate for self-custody, and Swan's always been an advocate for self-custody, but we can also help with multi-signature custody as well. for people that, want to distribute those keys, because there is a learning curve to self-custody. So I think getting any exposure right now is good, particularly whether you're getting exposure to spot Bitcoin through the Bitcoin ETFs. Maybe you're participating in some of these leveraged Bitcoin equities, but those have more of a learning curve as an investment than just spot Bitcoin itself. Getting exposure in your personal portfolio is going to lead you to go down the rabbit hole of learning more about what Bitcoin has to offer as that true decentralized bearer type asset that you have full and sovereign control over. And that's a really powerful shift in thinking when you understand that that's pulling you outside of the traditional monetary system, and it's giving you something that you truly hold yourself, that nobody can take from you. So getting any exposure helps to protect yourself from the debasement. But when you get to that journey where you start exploring self-custody, you really realize how powerful an asset like Bitcoin is. And that's when a lot of people start to find that they realize they don't have enough.
Yeah. And for those same people that are like, I don't feel like I have enough right now, which is pretty much everybody in the Bitcoin space. You can never have enough. What's your take on Bitcoin's price right now? Are we still undervalued? Are we near the top of this cycle? There's been a lot of talk that the 4-year cycles are done with. Like a CIO of Bitwise, Matt Hogan, has said, I don't think we're going to be seeing the traditional 4-year cycles anymore. It's going to be just kind of a long, slow creep up and to the right. What are your thoughts on that? Is 123 the top for 2025, or do you think we're going to see another rush here in the not too distant future?
Well, I don't think we're anywhere near the top yet. And I think that Matt's right. You've also heard Michael Saylor say the same thing, right? He told everyone winter's not coming back. And he very well may be correct. You got to realize that with all these corporations coming in, you've got a different type of buyer in the market now. The past several cycles were really guided by traders and venture capital that was trading in the market. And so when you would start to see these high leverage plays being put on, they would hit liquidations. You'd get the cascading liquidations. It would impact the price of Bitcoin in a very big way. What you're starting to see now when you have companies like Strategy and Metaplanet and Saquons that are out here who are putting in a treasury strategy that's only directionally long. These are not traders. They're accumulating Bitcoin. That Bitcoin's going on the balance sheet, and that's where it's staying. You're building a new type of structural bid underneath Bitcoin. There's always buyers underneath it now. And I think it's a matter of time before sellers at these levels get exhausted and the price has to move up to find where that next tranche of sellers is going to come from. So I do think that we have a structurally different market around Bitcoin. And, seeing it drop from 123 down to the 115 range, if you've been in Bitcoin long enough, you learn to expect periods of volatility. But the volatility has actually been dampened over time as we've seen more and more buyers coming into the space. So I think that eventually that demand is going to overwhelm the supply. And Bitcoin with a truly fixed supply, the only thing that can give is going to be the price. And I think we're going to see a repricing much, much higher.
Yeah, no, I'd have to agree with you. I think structurally we're in a completely different era during like Bitcoin's maturation process with all these big companies jumping on board, and we're no longer driven by retail traders that are trying to, carve profits off of frothy prices and, do these day trades. But with the treasuries, it does beg the question. We haven't seen this before. And aside from MicroStrategy, as you pointed out earlier, we haven't really seen many of these treasury companies and how they will react or survive a quote unquote bear market if we see one of those again, given the traditional cycles we've seen in the past. How do you see that playing out? Do you think maybe some weaker hands might be over leveraged and then they could sell off? Could that cause a domino effect for companies that didn't buy in as early as MicroStrategy? Does that concern you at all as we go forward and kind of figure out this new phase of Bitcoin's maturation process?
It really doesn't concern me because I think there's been a huge amount of education that's happened over the past several years. You've got the learnings that came from a company like MicroStrategy that did have to survive a bear, and a pretty brutal one. You had a lot of bad actors in the market at the time that were putting a huge amount of selling pressure as they were unwinding. And Strategy had to survive and come out the other side on that. And they had instruments that weren't as resilient as the ones that they have now during the time. You used to see things like fixed debt or fixed term secured debt on the balance sheet, which is something that a lot of these companies now want to avoid because you don't want to give up control in terms of how you execute. You don't want to put yourself in a position where you can be liquidated. So most of these companies are now opting for non-recourse debt. And that means that Bitcoin can draw down, but you're not at risk of being liquidated at any point. So I think that there's a lot more conviction out there with the executives that are implementing this playbook, and they're implementing it responsibly so that you're building a resilient business model that can survive through bear markets. Now, whether we see a significant bear market is completely up for debate right now. But the other thing that I would point out is people think that this market is significantly larger than it is. You know, you've got really one true player of scale out there, which is strategy, and everyone has seen, and sailors communicated very well, just how resilient they are at this stage. But all the other ones are very small in size. So if one or two of these companies do decide to get levered and maybe they take on secured term debt and they have a liquidation event, you've still got the structural buyers from all these other companies that are deploying it responsibly. And most of these other companies are still very small in scale. And the ones that achieve scale, I believe, are going to do it responsibly because they want to attract institutional capital. And in order to attract institutional capital, you have to have robust risk frameworks. You have to constantly be evaluating and stress testing your model to make sure that you're ready for whatever the market throws at you.
Yeah, well put, well put. Now, Ben, there's so much more I'd love to ask you, but I know you got to get going. Before we let you go today, if people in our audience are like, hey, I really like what Ben has to say, and I'd like to know more about what Swan Bitcoin does, what's the best place that I can send them to get more information?
Absolutely. To find me, it's just at Ben Workman on Twitter. I'm pretty easy to find. And for everyone else, you should go to swan.com and you can reach out. We've got a Deep Swan private team that's there and ready to help people on their Bitcoin journey.
Amazing. Well, Ben, thank you so much for your time today. It was an absolute pleasure having you on the show. And we hope to have you on again sometime. And I hope you have a great weekend, my friend.
Absolutely. Thank you, Hank. It was my pleasure.
All right. Okay, we're going to go to break, but when we're back, we got our bull run and, of course, our interview with Michael Turpin, the godfather of crypto. You won't want to miss it, so stay tuned. More Blockchain Report coming right back. All right, we're back with today's bull run. Now, in case you were paying attention, Bitcoin dipped to 114K overnight, hitting its lowest level in 3 weeks. But the question, of course, is why? Well, it's because President Trump dropped a fresh batch of trade tariffs on the global economy, and apparently the market was not in the mood for nationalism this time. The executive order formalized new tariff rates on countries like South Africa, Switzerland, Taiwan, and Thailand, ranging from 19 to 39%. Even Canada got hit again, with tariffs rising from 25 to 35%. Deals were also finalized with the EU, Japan, South Korea, and the UK. CNBC has a further breakdown. Let's take a look at their clip. Roll it, guys.
So with one executive order overnight, the president, as you said, increasing tariffs and adjusting them on dozens of countries across the world. All of these new rates set to take effect within 6 days from now, August 7th. So take a look here to break down everything the president has been doing. 7 trading partners now. This includes the EU, South Korea, Japan, locked in those framework deals, locking in those tariff rates of between 10 and 20% on all of their exports. And then another 62 countries, by my count, also saw their tariff rates, so-called reciprocal tariffs, increasing. Those will be between 10 and 41%. Those are on some major trading partners. That includes India at 25%, Thailand and Malaysia both at 19%. So some significant levels there. And then for nearly everybody else, the baseline tariff will remain at 10%. So a little bit of a surprise there that level didn't move higher. Now, all of that, again, taking effect next week, but 3 countries not included in any of those categories were China, Mexico, and Canada. So China holding firm at 30% where it's been for now. Mexico also holding the status quo at 25% after it struck a deal yesterday to keep negotiating with the White House for another 90 days. But Canada never reached any sort of deal. So overnight, its tariff jumped 10 percentage points up to 35%. So now you can take a look at it this way. I think this simplifies everything that happened. About 65% of everything the U.S. buys from abroad comes from just 5 trading partners, and tariffs on all of those goods will now start at a minimum 15%. And guys, President Trump spoke with NBC after he signed this executive order yesterday. They were talking about the tariffs. He said it is too late as of now for other countries to avoid these tariffs. But at the same time, he said his door is never completely closed to compelling offers. So that doesn't mean someone might come along in 4 weeks from now or something like it and could strike some sort of a deal. So on that question of how firm these are, he's leaving the door open at least a little bit.
All right, well, after this whole tariff news, the markets, well, they didn't exactly break into any kind of applause. Asian stocks fell, crypto fell, and Bitcoin broke below its previous range, shedding 2.6% in 24 hours and about 6.5% from its all-time high of 122K, which was set back in mid-July. Now, to make matters worse, $110 billion exited spot crypto markets in a single 12-hour stretch. And now, unless we see a rebound, the next key support zone sits at around 111K. So, what's really going on here? Well, some say it's simple profit taking. Hendrik Anderson from Apollo Capital said that after a monster run in both equities and crypto, it's natural for markets to exhale a bit, especially when tariffs get formalized. Still, July wasn't a total loss. Despite the recent dip, Bitcoin managed to post its highest monthly candle close ever at 115K. Not the biggest candle. That honor still belongs to last November when Bitcoin gained $26,000 in a single month after Donald Trump was reelected. But a record close is still a record close. And while tariff headlines may shake things in the short term, the bigger trend, Bitcoin's climb to macro relevance, hasn't changed. In fact, if a trade deal with China gets done, and that uncertainty could in fact lift. And when the smoke clears, all eyes will be back on whether the dip was a buying opportunity or a warning shot. Speaking of President Trump, he has spent the summer signing trade pacts like a man with a Sharpie addiction. He's hiked tariffs, cut handshake deals, and promised the American worker a comeback story. But based on the latest polls, the only thing coming back right now
fake news.
is skepticism. Hey! Now, Trump's approval rating has dropped to 40% according to YouGov, and only 36% of Americans approve his tariff policies. And while consumer confidence technically rose in June, voters aren't exactly lining up to thank the guy who made their avocados more expensive. Even the economists who aren't usually allergic to nationalism are a little uneasy right now. Douglas Holtz-Eakin called the deals handshakes at the point of a gun, warning they're unlikely to hold up long term. And while Trump loyalists call the tariff-fueled chaos a necessary price for American dominance, businesses, well, they're starting to sweat. Many of the deals were struck in the days after tariffs went into effect, not before, and often under the threat of even higher rates. Meanwhile, businesses are cautious, waiting to see if the trade drama leads to real investment or if it's just another episode of Art of the Deal, the extended cut. Even Trump's former critics are reluctantly admitting the deals are real. The European Trade Pact, for example, guarantees open access to European markets for American exports. Now that sounds great, assuming the U.S. private sector actually takes advantage of it. But as former Biden advisor Monica Gorman put it, businesses might still be pulling back due to all of the uncertainty. And let's be honest, nothing screams stability quite like issuing tariffs on India and then delaying Mexico's penalties by 90 days in the same week. For now, the White House is claiming victory. But the actual verdict will come during school shopping and Christmas season when consumers realize whether the new tariffs mean pricier toys, laptops, or Levi's. As Holtz-Eakin said, they will be judged on that outcome and what that does to the economy. And if voters feel it in their wallets come Q4, it might not matter how many trade pacts Trump signs. Because in politics, as in crypto, you can win the news cycle and still lose the market. And Strategy's back in the news as they officially pulled off the impossible, a $10 billion in quarterly profits. So yeah, $10 billion, 1 quarter. Wow. And Wall Street, well, they responded with a shrug and a 1.4% dip in the after hours trading. Because apparently record profits and owning more Bitcoin than most countries isn't enough to move the needle anymore. CEO Phong Lei called Strategy the most misunderstood and undervalued stock in the United States. And when you look at the numbers, it's hard to argue. Operating income rose a casual 7,100% year over year to $14 billion. That puts them 9th in the entire S&P 500 for operating income. Yet they rank 96th in market cap. Their P/E ratio is one of the lowest in the index, despite holding 628,791 Bitcoin that's worth over $73 billion. Michael Saylor went on CNBC yesterday to talk about it, and he was also asked about his orange ties. Let's roll the clip.
3% of all the Bitcoins that will ever be minted, 628,791 owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? So 5 times as much because of demand.
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have? Are they all orange now? Mostly.
We only wear orange ties.
You only wear orange ties because I went to DC and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin, and on I had a picture that I put out, and on Twitter I'm supposedly a holder, and it's dangerous to do that unless you're Michael Saylor.
Love the tie. Now, if you remember, Strategy began buying Bitcoin in 2020 with cash and later used convertible bonds and stock offerings to go full degen with corporate polish. The result? Their stock is up 39% this year, outpacing Bitcoin's 25% gain. And that move has inspired a wave of public companies trying to mimic Saylor's now legendary playbook. Strategy announced it will raise another $4.2 billion via preferred stock offering, tickered STRC, to buy even more Bitcoin. That follows a $2.5 billion raise earlier in July, which they used to acquire nearly 21,000 BTC. Now, if current prices hold, the next $4.2 billion haul could net them another 36,000 Bitcoin. They're calling this long-term initiative plan the 4242 plan. $84 billion in total Bitcoin buys. Meanwhile, their software arm still technically exists and pulled in $114 million last quarter, which is cute. More interestingly, they're inventing metrics. For instance, BTC yield, their ratio of Bitcoin per share, rose 25% this quarter. Or BTC dollar gain, their unrealized profit on Bitcoin holdings, hit $13 billion. They're now raising their full year targets to 30% yield and $20 billion in Bitcoin gains. And to cap it all off, they now sit in the NASDAQ 100. From obscure software company to Bitcoin juggernaut, Strategy's transformation is almost comical in hindsight. Yet somehow the market still doesn't get it. But hey, Bitcoiners do. And if this treasury strategy continues working, it won't be long before the rest of Wall Street is forced to learn the difference between a tech stock and a stealth ETF with laser eyes. And Bitcoin maximalist Max Keiser is back in the news, and he thinks that Michael Saylor might accidentally break the Bitcoin market, but in a good way. In comments to Be in Crypto, Keiser said Saylor's recent $2.4 billion Bitcoin buy could be the opening act in a full-blown $20 billion supply shock. But why? Well, because when one guy keeps buying tens of thousands of BTC and refuses to sell, it creates a liquidity vacuum. And if that vacuum gets large enough, prices don't rise gradually, they gap, as in candles you could park a truck in. Now, Saylor's strategy, again, holds around 629,000 Bitcoin and is sitting on $28.18 billion in unrealized profit. Now, according to Keiser, that hoarding behavior, combined with other treasury firms chasing diminishing supply, is setting up a market-wide liquidity crunch. He calls it a Bitcoin CDS on the collapsing fiat system. Not all literal credit default swap, of course, but the same idea. Bitcoin is becoming the hedge for systemic collapse. Or as Keiser put it, Bitcoin has been a CDS proxy on the global fiat money since day one. That's why the price moved up so much and why it'll move into the millions. Skeptical? Fine. But Keiser's not alone. He points to market structure. Bitcoin is consolidating in a pennant formation. And when pennants break after major accumulation, the moves are usually violent. So if strategy keeps gobbling BTC like it's Halloween candy and smaller players scramble to follow, that gap higher might come sooner than anyone expects. After all, you can't have a free market when half the float is in cold storage. And Saylor, he isn't selling. We're taking a break, but when we're back, we have our other special guest today, the godfather of crypto, Michael Turpin, joining us on the show. So stay tuned. So much more on the Blockchain Report when we come back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. Well, it's time for our second deep dive into today. It has been a real treat. We have another amazing guest, and our next guest, he isn't just an early adopter. He's one of the architects. CNBC dubbed him the godfather of crypto. I got to work on my brando. And with good reason, he helped launch Ethereum and Tether, co-founded BitAngels and the first ICO, and built the PR backbone of an entire industry. He predicted the Bitcoin supercycle long before it was cool, and now he's advising projects at the bleeding edge of AI and Bitcoin Fi. Please give a big Blockchain Report welcome to the one-man bull market himself, Michael Turpin. Michael, welcome to the show. Our audience is thrilled to have you, and so am I.
Can't beat that one. What a great info. Great to be here.
Oh, you are certainly deserving of it, and I love the jacket. That is a very inspired choice. I'm sure Michael Saylor would approve.
Absolutely. I definitely rock the orange, and I have my Bitcoin mug with me as well. So
I love it. I love it. So we got so much to unpack with you, Michael. I want to start at the beginning. What first drew you to journalism and creative writing, and how did those early passions shape the communicator that you became in the tech and crypto space?
Sure. So I just, people know from a young age if they're an artist, if they're a painter or whatever. I just always knew I was a writer. I remember being in the first grade and they had an assignment to go back and write a story. And most of the first graders came back with a paragraph or two. And I came back with 7 typewritten pages. And they were like, who is this person? And so I just always, love being able to put my thoughts between me and the world into words, and just spent my whole life just kind of perfecting communication. And obviously I've been using that for business the last few decades as well.
Well, we're all certainly happy about it because we need great communicators like yourself in this space to help spread the gospel, which leads me to wonder, when did you first hear about Bitcoin, and what made you believe it wasn't just another nerd money fad?
Sure. I think I probably heard about it in 2011, but I heard about it in detail in 2012, and I sent someone to check it out for me because I had a conflict that particular conference. Head of my San Francisco PR firm, which was doing other types of tech, went in and said, yeah, they're smoking crack. I have no idea how this would ever work. Now, had I gone myself, I would have been like, this is going to change the world, because I saw a similar presentation about a year ago. But the difference between me not seeing it, hearing about it, and sending someone else to check it out in April of 2012 when it was $4 versus when I finally went down the rabbit hole a year later in 2013 when it was 120 was about a 30x opportunity lost in a year.
Yeah. Was there a defining moment when you knew that this industry, we're talking blockchain and digital assets, was going to be your life work? How did that come about?
I'd say my life work sort of happens in segments, right? I mean, I knew in the early 90s that I was going to go all in on internet because I could see how that was going to change everything. People thought I was crazy in 92, 93 saying internet's going to change the world. And then about early 2000s, I saw that social media was going to have a huge impact. People thought I was crazy there too. Who cares what you had for breakfast, et cetera. And but then, when I really understood Bitcoin and read the white paper and just went down the rabbit hole in early 2013, I can see that I'd be doing this for quite a long time. I mean, I only get out of industries if they sort of calcify, which I think has happened to the internet. It's all big stacks now. I mean, nobody says, hey, I'm starting a new internet company. And it's pretty rare to have a new social media company too, because they're all kind of calcified. I think what's great about the public blockchain, and I could just be overly idealistic about this, I think that it still has a lot of innovation to come, and it's still, it's always going to be this battle of centralization versus decentralization. You actually had that with the internet too. In the early days, they talked about, how the internet, is a very pro-freedom platform, and it's decentralized, and it route. I think the Electronic Frontier Foundation said, the internet routes around censorship as if it was damaged, and it just simply routes around it. Or sorry, treats censorship as damage and simply routes around it. And that's sort of the early ethos of Bitcoin. That then extended to a number of other crypto projects, but it started with Bitcoin. Before that, with the cypherpunks. And now that we're sort of in the long predicted era of what happens when a huge percentage of Bitcoin and crypto is controlled by Wall Street, how does that change things? And the answer, I think, is some good and some bad. The OGs pretty much are like, we did not go and fight this fight so that Wall Street could go and put us into ETFs.
Mm-hmm. And I was looking into you before I had you on the program today, doing my due diligences, and I saw you co-founded BitAngels back in 2013. What did it feel like launching an angel network before the word crypto investor even existed?
Well, I've been an investor in other technologies. I was pretty heavy investing in internet projects in the early 90s, and then mobile projects, online video. And, my PR firm before, it was, almost exclusively into crypto. I was kind of an OG in the internet space. I mean, I helped launch the Motley Fool and Earthlink when it was 3 people, and a lot of other early startups, America Online Greenhouse. And, I did pretty well, because sometimes when people couldn't afford our fees, I'd be like, well, give me some stock. And 90% of them went nowhere, but, the 2 or 3 that did 50Xs, made up for it all. And so I kind of had that model down when I went into crypto, and it did even better because, even the ones that, only did okay, at least were liquid, as opposed to a lot of times you'd have very promising projects that, the VCs fought over it and they do a board takeover or whatever. And with crypto, at least in the early days, you could have a YOLO project that would still do 30X.
Yeah, those are wild times. When you were at BitAngels, you helped fund the first ICO, Mastercoin. What was that pitch like back then? Were you just making it up as you went along?
I'm still at BitAngels. Like? BitAngels is still around and doing well. I created BitAngels with David Johnston. When I met him at the very first Bitcoin Foundation conference, and I had noticed that day that there were 2 news announcements that came out. One of them was the $5 million funding of Coinbase. I think it was their first institutional money at a $20 million valuation, and it was Andreessen Horowitz. No, sorry, it was I believe it was Union Square Ventures. And then Andreessen Horowitz the same day had announced that they put $2 million into Ripple. I was like, those are big VCs. How come there's big VCs already putting money in and I'm not hearing many angels? And David said, well, they're kind of out there. They're like on Reddit groups, et cetera, but there's no formal group. And I was like, every industry that I know of in tech, has an angel group. Why don't we, and he goes, well, why don't we start one? I was like, okay. And I came up with the name BitAngels, and he literally, while we were standing on the rooftop in San Jose, he set up the website and put a post in the Bitcoin Reddit to say, hey, we're at the conference, and anybody interested in angel investing should come by. We'll have a little table in the main lunch area. We were hoping 5 or 6 people would come by. We ended up getting 30, including Vinny Lingham, Jared Kenna, Charles Cascaseria was down, runs Paxos. I mean, kind of an iconic group. Roger Ver. And so, we all got started and talked about, what we could do as, angel investors to, really initially there were no ICOs, right? This was early 2013. And the idea was to go and fund with our Bitcoin wallet companies, exchanges, kind of like Roger Ver did, right? And if nobody's going to fund them, then the ecosystem's not going to grow. And, in most cases, you still probably did better just keeping it in Bitcoin, but then the ecosystem might not have grown. And so the first ICO was Mastercoin. That was one that was almost 100% funded by BitAngels. By that time, August of that year, we were several hundred members. We were meeting just online every 2 weeks. And we would just, we didn't have a physical component other than we would sometimes get together at conferences. And, we ended up, I think it was raising $600,000 on a $1 million FDV. Just think of that. And it was called the Second Bitcoin White Paper. J.R. Willett wrote it. And it was basically talking about how to build kind of a layer on top of Bitcoin. It was really your first Bitcoin layer too, that you could use to launch assets. And he put all sorts of warnings that you're buying this because you're interested in the technology. This is not an investment opportunity. If you have any idea of thinking this is an investment, you should go and ask your financial professional who will tell you to run screaming away as fast as you can. You've been warned, you're going to lose all your money. So that's what the warning was. It did 200x in 4 months.
Wow, not too bad. I think most of us will take 200x these days.
Yeah.
What I was so excited when I knew you were coming on the show, Michael, is that you are just one of the true OGs of the space. And you've been affiliated with so many great projects. Specifically, I want to kind of talk about now Ethereum and Tether. What was the energy like around those in the early days? And how did you realize when did you realize how huge these projects would become?
I thought that they would both be big. I had no idea they were going to turn into the billions, right? I mean, I don't think any of us did because even Bitcoin was fairly small at that point. I met Vitalik in 2013. I actually was speaking at a non-crypto conference because I had started the first internet-based press release distribution company called MarketWire, and that had gotten sold to a very large Toronto-based hedge fund, Omer's Capital. Actually, it's a private equity group, and for like $100 million. And so that was considered something that was pretty iconic. And so the guy who ran Startup Grind for Toronto said, "Let me fly you out. I want to talk to you. And by the way, I understand you're in Bitcoin. There's a few Bitcoin people I want you to meet out here." And so that's how I got my introduction in, I think it was October of 2013 to Vitalik, who asked me to come out and talk to his class, his students. He was a freshman at Waterloo before he dropped out, and so I went out and talked about Bitcoin to Vitalik's, kind of Bitcoin enthusiast at Waterloo, and that's where I met Anthony Diorio as well, who was the co-founder of Ethereum. And it's interesting how fast things move. I mean, I met Vitalik in October. Anthony, kind of gave him some early funding for this idea called Ethereum in November. I mean, Anthony had basically, his Bitcoin story was he read the white paper, got all excited, and bought I think it was 800 Bitcoin at $10 a piece. That was pretty much all the money he had, and it obviously blew up. And then he used that to fund Ethereum. And then they did the ICO, and it was just, I mean, literally meet Vitalik in October, kind of start working with Anthony on some PR projects for his wallet company in November. Vitalik kind of came in and helped him with that while he was working on the white paper in December. And then in January was the launch of the white paper. And it was very quick, if you figured from that little piece of time. We actually pre-launched the white paper a week before the North American Bitcoin Conference at the Consumer Electronics Show, and had set up an interview with Vitalik and Wired that ended up being, they were one of the few big media that got it. Everybody else was sort of scratching their head because we had a couple other Bitcoin companies there, and most of the reporters were interested in Lamasu, which was a Bitcoin ATM. They're like, "What is this machine that spits out paper? Why do you think it's money?" And so, and they were all kind of ignoring, this, skinny, geeky guy who was talking about world computers other than Wired. And a week later, though, he spoke to a much more friendly audience at the North American Bitcoin Conference, and the rest is history. That sort of launched the whole, campaign to go and do the ICO in the summer.
That's amazing. And as someone who actually knows Vitalik, I gotta ask you this question. We've seen Ethereum kind of pump up the last month or so. It's been one of the darlings of the cryptoverse. I gotta ask, is it because Vitalik stopped playing with Moo Dang, that pygmy hippo? It seemed like he was wasting a lot of time hanging out with that cute little guy. And the second he stopped, Ethereum comes back into the limelight. Any thoughts there?
No, I mean, look, Vitalik does what Vitalik does, right? He was never an easy person to control for messaging, but he's the horse you're riding, right? I mean, you never bet against Vitalik. And, I think that there's a lot of FUD out there about Ethereum, usually by competitors. And every cycle, it seems that like Vitalik will say something that gets misinterpreted. Like if you remember Buzzword Coin when Ripple was attacking him. And it dropped the price to 80, and and everybody's like, oh, but, just like as many times as Bitcoin has been dead, Ethereum I think has been dead even more. And even this cycle, it was down around like 1,500. And I remember literally some of the biggest YouTubers saying, nope, it's never coming back. It's dead, or it'll be 1,500 forever. And then all of a sudden, like all these people are shorting it, and there was a short squeeze, and it's been going up ever since. And I think they underestimated the Ethereum treasury company impact. Because again, if you're going to do a Bitcoin treasury company, Ethereum pays yield, and a lot of other things. I mean, it's just like, it still is number one in DeFi. It still is by a long shot. It still is number one, in a lot of other areas. And so, I mean, I did believe that Justin Sun made it interesting points when he said, what would I do if I was running the foundation? He was like, I would immediately start taxing the L2s. I thought that was very interesting. So now look, Ethereum is still the king of the alts. In fact, Vitalik once said, and I put this in the book, that referring to Ethereum as an altcoin is like referring to a Lamborghini as a horseless carriage.
I like that. But I want to move now from the king of the alts to the king of the cryptoverse, which of course is Bitcoin. You've talked about the 4 seasons of Bitcoin. Can you walk us through them, and where do you think we are right now?
So it's surprising to me that more people, a lot of people sort of have picked up on the 4 seasons, the 4-year cycle, but they haven't really studied or recognized. And I did a lot of deep dive research. Literally going back to 2015 when I started seeing some repetition of the first cycle, that it has been as predictable as cycles in the stock market, like sell in May and go away, or the Santa Claus rally. And yet when I try to explain this to, traditional investors, that there's cycles in crypto like there are in real estate or in the stock market, they're like, no, it's a Ponzi, blah, blah, blah. And so I thought I just really needed to go and write a deep dive book. I've been doing presentations at conferences going back to like 2015, 16, and really a lot more at family office and, kind of TradFi events the last 4 or 5 years. But I thought, you know what, I need to go and put it all in one place. And I wanted to come out right as we were going into the next bull market. And so I, in my book, projected, and I finished writing the book in early August of last year, that Bitcoin summer, which is the day that you pass the all-time high of the prior cycle, would happen in early November if Trump won and late December if Camel won. And sure enough, Trump won, and it was November 5th that we hit that Bitcoin summer. So I'll give a quick summary of the 4 seasons and the way I describe them.
Yeah.
Satoshi in the white paper said that as long as there are more people using and buying Bitcoin every 4-year cycle, then there are new Bitcoin put on the market, which of course the miners get cut in half every 4 years. The price has to go up. It's just simply supply and demand. And my addition to that is, yes, it goes up, but not in a straight line. And if you look at sort of the price at each halving, which is so far, if you look in a rear view mirror, been as close as we can get to the fair market price of Bitcoin. You've never had a halving where it was at the parabolic top of the market. You've never had a halving where it was at the bottom. It always seems to come back to the median and where it should be for that cycle. First halving, $12. Second halving, $670. Third halving, $8,700. And fourth halving, $64,000. So that's pretty substantial growth from 4-year cycle, the 4-year benchmark to 4-year benchmark. Now, within those cycles, you've had 20 to 100x, variations. So, your first halving was at $12, and then it went up 100x to the top of the cycle, which is 1,200, and then it went down 85% to 171. And then from there, so I basically, the easiest ones to tell are Bitcoin Spring and Bitcoin Summer. Bitcoin Spring is really simple. It's the day of the halving. That is when the seed of the new cycle is planted. So all of a sudden you go in one day from the miners being profitable to being unprofitable. If on average the day before the halving they were making 20%, all of a sudden they're losing 30%. Now in the early days, you actually had some pretty wild adjustments to difficulty. I mean, I remember one time, I think it was around 2013 or so, 2014, that like you end up having 20% difficulty, jumps or cuts every 2 weeks when the difficulty adjusts. You just didn't have that as it gets to be a larger asset class. And the very first year and a half, the Bitcoin difficulty, and I have a whole chapter on this, mining and difficulty, and how important it is to Bitcoin, was at level 1, which means that you didn't really need to make the math problem much harder because there just weren't that many people participating. And the equivalent of a level 1 difficulty is you can use your laptop and your math processor needs to answer a question like, what's the square root of 9, right? And then when all of a sudden the GPUs started happening, that, was Laszlo Hanic who, did the Bitcoin pizza. The reason he had so much Bitcoin was because he was the one who figured out how to use his gaming card to get a lot more Bitcoin, to the point that Satoshi actually emailed him and said, cut it out. But he goes, I know I can't stop you, but I beg you, don't accelerate difficulty this soon. We're not big enough yet. And Laszlo ended up getting over 100,000 Bitcoin from doing that. And of course, he claims to have zeroed out because he bought the pizza a couple times and then finally spent most of the rest of it on a computer. I guess you get Bitcoin at the price you deserve and you sell it at the price you deserve. And some of these early guys just, would be multi-billionaires if they held on to even half of what they mined. But the difficulty level went and jumped from 1 to 2, and I think it was August of 2020, and then the next month it was 3x difficulty, then it was 5x difficulty, then it was 8x difficulty. Today it's 100 trillionx difficulty, which is just phenomenal growth, right? So the day of the home miners is long gone. I mean, when it got to a couple of 100x, all of a sudden you can't really use a laptop anymore. But now that you're at 100 trillion, and you only get 1/16 the award, so it's really 100 trillion times 16 times harder to get one Bitcoin by mining than it used to be in the early days. So the early people who, I got to interview Mark Karpeles from Mt. Gox at Korea Blockchain Week last year, which was a real treat. He hadn't talked to anybody for an interview in years, but he wanted to kind of come out and say he was involved in starting a new exchange and a new security platform. And of course, I asked him, why would anybody trust Mark Karpeles with another exchange? He didn't have a good answer to. He actually started mining in early 2010 when he was asked with his payment platform, his payment company, to go and somebody had asked him, a Frenchman living in South America, had said, can you convert Bitcoin into euros? He's like, what's Bitcoin? He looked it up, found somebody who would take Bitcoin for euros, and then said, I'm technical, I should know what Bitcoin is. And he read the white paper, turned on a laptop, and all of a sudden within an hour he had 50 Bitcoin. It was like, well, gosh, that's too easy. Must not be too valuable. It's that easy to get. And then he said, but yet somebody's willing to pay for it. So he actually had a side business that was a personally owned hosting company with about 30 computers. And he just put the Bitcoin software on all of them. And within 4 months, he had 200,000 Bitcoin.
Whoa.
And then typically wound up and he said, I got enough. And he would be one of the richest people. He'd be up at Michael Saylor and, not even Michael Saylor at the, he'd be, 200,000, that's a lot of money, right? 200,000 Bitcoin.
Yeah.
20 billion or something like that. He would be up at that level of wealth had he simply just done nothing else but just keep his private keys. But instead, when he started Mt. Gox, he moved all of his Bitcoin over to Mt. Gox and thought it'd be a safer place to store. I know.
Oh no.
There are amazing
my
stories
gosh.
like that. So yeah,
That's insane.
that first pre-halving cycle is just a fascinating time, and I'm hoping in a future book to kind of like explore, in more depth the kind of stories and lessons of that era. But right now, I mean, Bitcoin Supercycle. I just want to educate traditional investors about how Bitcoin, why it's been the best performing asset class for the last 15 years, or why it will continue to be the best performing, albeit not at 1 million X returns, but still the best performing asset class for at least the next 20 years. And
yeah.
So basically, again, to finish the seasons, the Bitcoin spring starts the day of the halving, and it's the shortest season. It's historically only lasted 4 to the longest has been 7 months. And it ends, by my definition, when you eclipse the high of the prior cycle. So after the first halving, you had to go up to the high of the pre-halving cycle, which is $30. It went from a tenth of a penny, which is the first known sale of Bitcoin, which is Marty Malky, Satoshi's intern, as I like to call him, sold 5,050 Bitcoin on PayPal for $5. And then it ended up going up to this crazy high of $30 when the Gizmodo article came out that said, hey, Silk Road, you can go buy drugs with this thing. But there was really not that many places to buy it other than Mt. Gox. And so everybody's scrambling to buy it, and the price went up to 30. And then when Mt. Gox started having problems and getting people stuff, they're like, oh, it's crashing, and it went all the way down to $1. Now, if you bought it at 30 and just left it alone, you would have been just fine, right?
Yeah.
Folks like I had a long chat with John McAfee once when he was still alive, and he had bought Bitcoin all the way up to about $30, and then he sold it all on the way down because he was afraid it was going to go to zero. And somebody as sophisticated as him, still panic sold. So Bitcoin summer, though, is becoming really consistent every time. So when you hit $30 after the first halving, that's when it started going up parabolic. Because after the halving, it's actually flat. It's flat because you have two competing forces. You have the selling pressure from miners if they don't have a kind of a savings, which they do now. They typically have traditional financing, but some of them still want to sell their Bitcoin to pay, keep the lights on or buy new machines. And then it never goes down very far because you have people who see that the halving always leads to higher prices, and they'll scoop up any drop. And so that's really why, including this last time, you had a 63,900 the day of the halving. 6 months later, you were still around 64,000. It had dropped down to a little over under 50. It had gone up all the way to a little over 70, but until you hit the prior cycle's high, which was 73,850, it didn't go parabolic. But every time, day of Bitcoin summer, again, it was in February of 2017 that it finally, went over. It was in early 2013 that finally went over $30. By the end of the year, it was $1,200. It took forever to get back to $1,200 again. You got to remember, we were at $1,200 in November of 2013, and then it crashed down, and it never got over 1,000 for the entire year of 2014. Never got over 1,000 the entire year of 2015. Never got over 1,000 the entire year of 2016. It seemed like it would never come back. And yet, early 2017, again after the next 2016 halving, it started inching up. It got to 1,000, but that still wasn't the number you needed. You needed to get above the all-time high from 2013, which is 1,240. And as soon as it got there, boom, it started going up. Now, 2017 was a little bit less parabolic in the beginning of Bitcoin summer, but it certainly ended up the way that they all do, which is kind of a blow off top. And so there was no double bubble in 2017, and you started the year around $900. You crossed into the Bitcoin summer in February when you crossed $1,200. By the time at the end of July 2017, 8 years ago, came, you were still only at $1,900. It was about $1,980 8 years ago. And yet by the end of that year, it was $19,800. So you had a 10x in 6 months. And so I think that's something that we're going to be looking at this time, sort of this pent up, kind of blow off top that'll be the fourth quarter of this year. Now, we won't be 10x. We're not going to go, to $1 million this cycle, even though some people might say we will. And those are the ones we're going to be buying at 250, 300,000, and providing liquidity for people who want to get out at the actual top. But I do see us getting, somewhere the median point is we were at 100x in 2013 between the beginning of Bitcoin spring, the halving, and the end of Bitcoin summer, which is the blow off top. 100x up, and then a drop by the end of Bitcoin fall. So Bitcoin fall starts the moment of the parabolic top, and it ends roughly a year later. That's all it takes at the blood in the streets bottom. And the last two cycles were almost to the day. 2021, we had our blow off top around 67,000 on November 10th. Exactly 1 year later, November 10th, 2022 was FTX. And that was the bottom. Even though the whales didn't even start buying back in until it was, maybe around 18,000, because they thought it was going to go lower. And the whales, it's interesting. They tend to sell when they do sell, maybe about 6 weeks before the top, and they tend to buy back about 6 weeks after the bottom. So they're cautious in both areas.
Mm-hmm. Now, despite these
and the longest season,
go ahead, please.
The longest season is winter. That is, Bitcoin winter is not when it's going down, it's when it's already crashed. And that's about 18 months. Right. And that's sort of just looking for hope. And they repeat it every 4 years.
Yeah. So here's my question for you. Despite the fact that there has been over Bitcoin's life cycle of 15 or 16 years, this element of seeming predictability with the cycles themselves, and with the unprecedented growth we've seen from Bitcoin during that time, why do you think traditional investors still fail to grasp Bitcoin's price cycles and narrative momentum? Like, what's still keeping them away at this point?
Well, I think the main thing has simply been they'll ask their accountant, they'll ask their lawyer, they'll ask their stockbroker. I mean, there's certain times in the cycle that I tell close friends who've been curious about Bitcoin, this is probably the safest time to get in right now, right? And I told them around 200, in 2015, it's like, I think it's not an if but a when that we're going to get to 10,000, and certainly we're going to get back to 1,000, and that's still a 5x. And they're like, some listened, they were very happy. Other ones were like, yeah, don't you think it's going to go down to below 100 again? You think it'll go below 50? They were all looking to and I was like, no, it's not where the charts are looking like. It's on the way up now. I said the same thing. I mean, a very good, friend of mine, who was kind of, had inherited some money. She had a few $1 million. She was looking where to put it into real estate, et cetera, et cetera. And it was around $7,000 Bitcoin. And I was like, you know what? You should put $1 million of your 10 or whatever you had into Bitcoin. And, you're going to be very happy because you're not going to go 10x on real estate. You can very easily go 10x on Bitcoin. And she's like, thank you. I will ask my stockbroker. And of course, you know where that went. Mm-hmm. And obviously, had she simply done that, and that was in 2020, I think. I mean, today she'd be up from 7,000 to 115. Pretty nice, almost 20x. And so her $1 million would have turned into 20, in just in a 4-year period. Mm-hmm. So, and so now somebody just says, I'll show my stockbroker, ask my stockbroker, and go, make sure your stockbroker reads this book. And I think it's really, the biggest thing is that the stockbrokers and the banks and things like that, they talked their book, right? They had no reason to recommend. They were making commissions on it. Now that you got the ETFs, all of a sudden they're like, you could consider putting 1% of your, at-risk capital into Bitcoin. Make sure you do it in the ETF. I'll get a commission on that. And so, finally they're giving you permission to buy Bitcoin now that it's 115,000, when they were like saying, ooh, super risky when it was like $200. And again, the fact that the lowest it could go would be 200 to 0, and yet, the upside was just unbelievable. And I think the same is true today. I mean, you're at 115,000. I think right now it's not an if, but a when that we hit $1 million. I think that Bitcoin now is this incredibly safe asset class. And I won't say that about any other cryptocurrency, including Ethereum. Ethereum can still die. I don't think Bitcoin can.
Yeah. No, it certainly seems like right now it's becoming Bitcoin and then everything else. And then that leads me to ask the question, what actually sparked your book, the Bitcoin Supercycle? Like, what are the biggest misconceptions that people still have about the concept today?
Well, again, it was for all these, friends that I've had over the years that were intelligent investors in startups, in real estate, in gold and silver, and they just would ask me about Bitcoin. I'd give them the answers, and they'd be like, "Oh no, I thought it was too risky." And yet they had no problem putting 50 grand into some YOLO startup that probably had a 1 in 50 chance of making it. The part of their portfolio play. It's like, well, put 50 grand into Bitcoin at $1,000. It would have been part of your portfolio play, and you would have been the best part of your portfolio because you're up 100x now, and in 8 years. And so, I think it was just putting all the charts and graphs and facts and stories and just putting it into one easily digestible. I'm a good writer, and so I spent a lot of time making it read like a story but still be defensible as a textbook.
Well, and if people in our audience were interested in getting their own copy of the book, what's the best place that they can go to do so?
Amazon. I mean, it's in select bookstores that Simon & Schuster distributes, but Amazon, it's almost always in stock, although we had a run on it about 2 weeks ago. It was briefly out of stock, but they're now stocking larger amounts. But just Bitcoin Supercycle, Michael Terpin, Terpin. Just go to Amazon and you can buy it there. And then I also, in upcoming weeks, I'm going to be putting out an AI version. And so you can just go to bitcoinsupercycle.org, which is my site. I also, in the process of launching a fund, which is bitcoinsupercycle.fund, around the principles. But you'll be able to get the AI version, which, what's cool about the AI version is it's going to automatically translate into 35 languages. And it'll have my avatar and my voice. And so I'll read it to you in English without having to sit for 12 hours in a studio. I will read it to you in Chinese. I will read it to you in Arabic. And, that's the cool thing about AI. And it'll also go in and be updated automatically on all my tweets, all my appearances. And, that's pretty much, where we're at. Yeah, I don't have the link yet for the AI version, but it will be out there in another couple weeks.
Oh, I love that. You're doing God's work out there, Michael. And a big point of conversation we've seen recently is, are we still going to see these Bitcoin cycles the way we've seen previously going forward? You've had people come out like Bitwise's Matt Hogan, who says, I think the cycles are going to be a thing of the past, and going forward, we're going to see kind of just the slow and up and to the right movement. What are your thoughts on that as we enter this new phase of Bitcoin's maturation?
I think he's selling his book because he wants people to just act like a Bitcoin ETF, just like a Bitcoin gold. The last time I heard someone say that something has gotten so established that it's the end of cycles was right after the year 2000. There was a piece, I think, in USA Today where some analysts had said, the internet now is so efficient that it's the end of business cycles. We're now no longer going to have, market crashes and market run-ups. We're just going to have the stock market just slowly go up over time. And of course, a year later, we had one of the biggest crashes ever. Not even a year later. It was like, the NASDAQ, and then you end up having, after 9/11. And so I think that, human emotions are what drives everything. And, they drove it much more parabolically in the early days because it was a smaller asset class with a less proven history. If you look at the early days of petroleum, people weren't sure it was ever going to beat whale oil, and it had wild swings in its pricing. And now it still has swings based on geopolitics, et cetera, the fear and greed. And the same thing will happen. I think that we're going to still see very similar cycles around my 4 seasons, as long as the halvings stay in presidential years. They've moved up slightly. I think Satoshi intended to be in presidential years. And it was November of 2012. It was then the biggest jump we had in terms of like earlier in the cycle was in 2016 when we had mining disruption because, China sort of like got rid of miners, a lot of them. And so we ended up going to the shortest cycle. It was only through July of 2016. And then 4 years later, we were May of 2020. Now we're just like, April of 2024, and it's estimated will be maybe late March of 2028. So we can have another 5 or 6 cycles that are still within that. And by then, we're 99 point something percent distributed. And I think, though, that we still, here's where the super cycle part comes in. So we've had proven diminishing returns every cycle. It was 100x the first cycle. We're never going to have that again. You're not going to have a cycle where you go from 100,000 at the halving, to 10 million at the top. So we're never going to have that again. The second cycle, and then we dropped 87%. Or sorry, 85%. 85%. Yeah, it's in the book. In the mid 80s. And then you ended up going from the second halving up 30x, and then it dropped 83%. It was 85, then 83. And then the third one, I thought we were going to go up 10x. It was just sort of in the kind of like progression of 100x and then 30x and then 10x. But we had bad macro with high interest rates, Elizabeth Warren's war on crypto, et cetera, that we only went up 8x. But I think most people would be happy with 8x in a year for an asset class. And I was on a panel debating someone about cycles, and they said, well, I think interest rates are more important than halving. And I was like, well, if that was the case, you wouldn't have even gone up 2x from 8,700 and halving. Instead, you ended up going 8x. And so this time, I'm projecting 3x plus or minus macro. So in other words, we should be somewhere at the peak, which has always been in the fourth quarter, of about 193. If the tariffs and the economy are so bad that it just scares everybody, we'll have a hard time getting up that high. On the other hand, if that ends up working its way into the system, and the positive macro things, all these Bitcoin treasury companies buying Bitcoin. Michael Saylor alone just bought 21,000 Bitcoin. Divide that by 450, and you'll see how many days of mining that is. It's a lot, right? And so where's the Bitcoin come from? We were 95% distributed, and yet only 5% of the world has any Bitcoin.
Right. So let me get this straight. Just for our audience at home, this is not financial advice. The godfather of crypto himself thinks that we could be at 193 at the peak of this current cycle. Is that correct?
Correct. Plus or minus macro. So somewhere between maybe 170-ish, and on the high end, plus 20%, so like maybe 225 or so. If we go much above that, then I believe we've started the super cycle, because the super cycle is where you overlay the diminishing returns that's been happening every cycle with the fact that you have an S-curve of adoption. We've been going up fairly slow in adoption because most disruptive technologies like mobile phones, like the internet, they kind of take a while to get past the early crazy people. And then all of a sudden, when your mom starts using the internet, when your grandma starts using the internet, that's when it jumps from the early adopters is, a number of books like Crossing the Chasm talk about this. You're 3 or 4% that are the early people that sort of establish it. They're it takes forever to get up to maybe 7 or 8% of the population. But then when the early mainstream starts going in, that's when you start roaring up, and you go from maybe 5 to 8% to 50 to 80% in a decade or two. And when that happened with mobile phones, it made the phone manufacturers, the chip manufacturers rich. When it happened to the internet, it made Microsoft and Cisco rich. But you can't go and make the miners super rich because they can't make any more Bitcoin. It has to come from the current holders. And that's where's that Bitcoin going to come from? You're not going to find new Bitcoin on Mars. And if you all of a sudden want to go from 5% of the world having some Bitcoin to 50%, where's it going to come from? It has to come from current holders.
Right. Well, Michael, I got to say, I'm excited that it sounds like we definitely got some room to run, and it's been an absolute pleasure having you on the show today. I know you got a busy Friday ahead of you, so we're going to let you go. But before we do, just again, for our audience, if they want to learn more about you, get your book, again, what are the best places I can send them to do so?
So you can follow me on Twitter at my name, Michael Terpin, MiChaelTerpin. I'm also on LinkedIn, and I respond when people actually say something that, hey, I saw you on the show, et cetera, and, why I'm interested in discussing things with you. So I do read that. And again, just, buy the book on Amazon, and please, if you like it, leave a review. And again, in the next couple of weeks at BitcoinSupercycle.org, I will have a link to the AI version, which will basically be updating constantly, and you'll be able to ask it questions from the book and from my updates.
Amazing. Well, gang, you heard it from the Godfather himself. Go check out the book. You don't want to miss it. And Michael, thank you again so much for your time today. It was an absolute blast having you. We hope to see you again sometime in the future, my friend.
When we hit 200,000, I'll be happy to come out and say why you need to start selling, because Bitcoin fall should go down 2/3 by the end of next year.
All right, I'm going to hold you to it. Michael Turpin, thank you so much for your time, and you enjoy the rest of your weekend, or enjoy your weekend. All right, cheers.
All right,
thank
real
you.
pleasure. Thank you.
All right, we're going to take a break. Yes, thank you.